Now we're going to start a new topic. Topic 1, 2, 3. Topic 4, right? So topic 4 is your last step of your accounting cycle. So what is the last step of your accounting cycle? Anybody?
Financial statement.
Financial statement. All right. So we will do the last step of your accounting cycle. Before I explain you final account, let me teach you something about depreciation, and then I will teach you about the yes. So let me teach you depreciation first. Wait. Yes. So I have to teach you depreciation. I think this is your depreciation is very short topic. So after depreciation, we will start with the next one. So next is 1, 2, 3, topic 4. Topic 4, which is depreciation. This is a very short topic, but it's very important to understand it, right? Depreciation, right? Now, you know that what is a depreciation? Depreciation means meaning, but I quickly repeat again for you to clear the value of money. Oh, sorry, not the value of money, the value of assets. Assets go down. The value of asset go down time to time. That's called depreciation. And that's the meaning of depreciation. All right. Okay. Now, how to calculate depreciation? How to calculate depreciation? In order to calculate depreciation, we have methods. We have 3 methods, but we will focus here only 2 methods. So the first method is a straight line method. Straight line method. All right. And another one is a reducing balance method. Reducing balance method. All right. Straight line method and reducing balance method. So we have 2 methods. Sometimes some company applies straight line method. Some company apply a reducing balance method to calculate your depreciation. All right. So now, before I explained you about these two methods, let me explain you something else about depreciation. Then we discuss more about these two methods. Right. So now, remember, the word is depreciation expense. Depreciation expense. And another one is accumulated depreciation. Accumulated depreciation. Depreciation expense and accumulated depreciation. Depreciation expense appear, it's an expense. So that's why it belongs to your income statement. Income statement. For that year. For that year. So what does it mean? For example, 2020, when you prepare your income statement for 2020, in this 2020 you report only 2020 depreciation expense. All right, I repeat, when you are preparing your income statement, you will record only that year expense in your income statement. All right, now accumulated depreciation. What is accumulated depreciation? Accumulated depreciation means the time you bought this asset until now, you add all the depreciation. So for example, I purchase my asset. So let's say I bought, for example, I bought assets in 2019. Now we have 2021, right? So we have 2020, we have 2021. So my depreciation is 100, 100, 100, all right? So how much is my depreciation expense? My depreciation expense, this is my depreciation expense for 2019. Depreciation expense 2020, 100. Depreciation expense for 2021 is also 100. This is my depreciation. So when I am preparing my income statement for 2019, my depreciation expense is 100. Same thing, 100. Same thing, 100. So when I'm preparing my income statement for 2020, my depreciation expense is 100. When I am preparing my income statement for 2021, my depreciation expense is 100, all right? But when I am preparing my balance sheet, all right, balance sheet. What is balance sheet? I will explain you later. When I am preparing my balance sheet, I will record accumulated depreciation. Accumulated means total depreciation that time. So how much is my accumulated depreciation? 100. Here, 2019, my accumulated depreciation is 100. 2020, in my balance sheet, how much is my accumulated depreciation? Can you tell me? My accumulated depreciation, the time I bought, it is 200. And accumulated depreciation in 2021, my accumulated depreciation is 300. Accumulated means total depreciation since you bought the asset. Bought the asset. Everybody understand that? So I repeat, depreciation expense is different than accumulated depreciation. Accumulated depreciation means what is the depreciation until now, since we bought the asset. You bought motorbike 5 years ago. From 5 years until now, how much is the total depreciation called accumulated depreciation? And every year, how much value of motorbike reduce? This is your depreciation expense. All right. How much depreciation value reduce every year? 2019, my depreciation value reduced by 100. 2020, my depreciation value reduced by 100. 2021, my asset value reduced by 100. So this is my depreciation expense. Accumulated means total until this time. Everybody understand? It's very important. Is that clear, everybody? All right, so now let's move on to calculation now. So now I will teach you how to calculate depreciation using straight line method and using reducing balance method. Right, straight line method and using reducing balance method. Now, straight line method. So we have a formula. Everybody finished writing? Can we move on to the next? Vinmay, turn it on your cameras. Kwanbui? No? All right, so now first is a straight line method. Depreciation methods. Right. So first method is a straight line method. Straight line method. Straight line method. All right. So what is straight line method? So we have straight line method means every year the depreciation you are calculating will be same. So remember, depreciation could be same every year, could be different every year. This is not really matter same or different, right? But in straight line method, depreciation every year the depreciation you are calculating will be the same. That's why straight line, right? Depreciation for every year will be the same. Depreciation for every year will be the same, right? This is called straight line method. Now, how to calculate depreciation using straight line method, right? So we have a formula. Formula is carrying value minus residual value carrying value minus residual value divided by useful life of the asset. Useful life of asset. Carrying value minus residual value divided by useful life of asset. Now, carrying value means the we can say the value of asset right now. Carrying value means the value of asset right now. Residual value. Okay, let me write down carrying value. Carrying value means the value of asset, the value of assets now. The value of asset now. Residual value means the value of asset left, right? Leftover value of asset. Left over value of assets. Leftover value of asset is a residual value. All right, residual value is a leftover value of asset. Right. Useful life. Useful life means how much is the total life of asset in number of years. Right. The life of assets in number of years, right? The life of asset in number of years. So this is called the useful life of the asset, right? So let me give you example. So for example, the carrying value, let's say the carrying value of asset is, for example, $10,000, right? And residual life means leftover value of the asset. Leftover value of the asset means um, the asset you will sell in a scrap. You can say that scrap value, right? Scrap value. So residual value is, for example, 2,000. Residual value is 2,000, and the life of total asset is, for example, 8 years. 8 years is the total life of the asset. So it's 8,000 divided by 8. So 1,000 is the value depreciation. Depreciation. All right. So means after 8 years, this value of the asset will be 0. Right. So it's like this. 8,000 is the value of asset minus 1,000. This is your depreciation. 7,000 minus 1,000. This is your depreciation again. This is 6,000 and then 1,000, so on. So after 1, 2, 3, 4, 5, 6, 7, 8, the value of asset will be 0. So that's the meaning of depreciation. All right. Everybody understands straight line method?
Teacher, can I have a question?
Yes.
Can you explain me residual value?
Residual value means when you sell the when asset doesn't have any market value and you eventually you sell the asset in a scrap. You know scrap?
No.
You don't know scrap. Scrap means, for example, any okay. For example, you have one machine. Okay, you have one motorbike. Your motorbike is very, very, very old. You wanna sell this asset in a market. Now, if you wanna sell your motorbike in a market, but it's very, very old, but nobody wants to buy your motorbike, what you will do with this motorbike? Nobody wants to buy, and you do not need it because you have a new motorbike. Because if you keep that motorbike, you have to pay for parking and pay for maintenance and so on. So better you sell it because you don't ride it, because you have a new motorbike. But you can't sell because nobody wants to buy. Will you throw this motorbike in a garbage? Will you dump this motorbike?
Maybe.
Maybe. Okay. Khan, she said no. Why? What you will do?
So usually we're going to low down the cost and sell.
Even though you lower down the cost, nobody wants to buy because your motorbike is extremely old and it makes so much noise because it has an old engine. It's require lots of maintenance. It's consume a lot of petrol because it's use very old engine. Nobody wants to buy.
Right
Because
now,
the money you spend to modify the same money you can buy new motorbike. So what you will do? Throw in a garbage?
so there's some company, like some people collect those things to reuse it, like to reuse the material, and they will.
They will recycle it, right?
Yeah, they.
Yes, that's the meaning of scrap value. Now you understand the meaning of scrap? Have you ever seen some people, they collecting some garbage from the street? What kind of garbage they collect? They do not collect all kinds of garbage. They collect plastic bottles, they collect cardboards, they collect metals, especially like as the can, the beer can or cold drink cans. What they do with this garbage? They go to the recycle company. They recycle that cardboards, that papers, that plastics, that metals, that steel cans or whatever kinds of aluminum cans. They recycle to sell to another company. This is called a scrap business. Many people, they do that scrap business. So you will sell your motorbike to scrap. When you give to the scrap, because your motorbike have a lots of steel, right? How many?
59 out of 50.
50 out of 50.
And I was confused.
50 out of 50.
The end, I was confused, but I win.
So what is the answer?
Now this is correct.
How many marks?
49 out of 50.
49 out of 50.
But I did the question. Also confused.
Okay, no problem. I will help you with it.
Sure.
Yes. So
How to
let me complete the scrap. So your motorbike have a lots of steel, lots of iron in your motorbike, right? Steel in your motorbike. Steel is expensive metal, right? So you can't just throw it in a garbage. Nobody threw the steel in a garbage, right? So you will scrap this to the scrap company. That's the meaning of residual value. This $2,000 is the scrap value of your motorbike. All right. Residual value means scrap value. Yes. Now you can ask. Ask your question. Ask me your question. Ask me if you have any question.
sure.
Yes.
Yeah. How to calculate receive value?
Residual value, it's basically a scrap value. We don't have a particular methods to calculate scrap value. For example, your machine is a iron, and you go to the scrap company and you ask them, how much do you pay? How much you pay me if I sell you 5 kilo steel? And they will say that we pay you around 100,000 1 kilo. So if you have a 5 kilo, then we will give you 500,000. It's simple. You ask the scrap companies, how much do you sell? How much do you charge if I sell you? Simple.
So
all-
the residual value will be the same every year, right, teacher?
Residual, no. Residual value depends upon the scrap companies. Because residual value has nothing to do with depreciation or nothing to do with the market value, because scrap value depends upon the scrap business, the demand of scrap items in a business, in a market. It depends. So it's not really fixed, because it's kind of business. So you have to ask the scrap companies. They can suggest you how much money do they charge. Same thing like as your motorbike. You can calculate value of motorbike. You bought motorbike 5 years ago, 20 million Vietnam dong, right? Now your motorbike doesn't have any market value. So remember, it should not have any market value. If it has a sellable value, that's different story. That's different story, right? So what does it mean? I ask you a question. You bought a motorbike, $1,000, right? And depreciation for motorbike, let's say, is $100. And you sell motorbike at $950. So how much is profit or loss? So you purchase $1,000. Depreciation is $100. What is 900? What is the meaning of 900? 900 is a market value. The market value of motorbike right now is 900 because you minus depreciation. Market value is not 1,000. Market value is 900, and you sold at 950. So $50 is your profit. Remember that. So idea is that if you're selling, this is not selling here because you're calculating depreciation here. So idea is when you are calculating, when you sell the motorbike, Ethan, let me call you. When you sell the motorbike, then you have to always minus depreciation from your market value, because if you do not know market value, you cannot calculate your profit. Right? But the idea is, how do I know this value? How do I know this number? This number comes from here. Right? This number comes from here. So everybody understands straight line method? Is that okay? Can we move on to the second method?
So for this method, like we only calculate the depreciation for the first time, and every year we using the same value, the same
Yes.
amount.
Yes, that's right.
Okay.
Every year you will have every year you have a same. Every year you have a same. So if you calculate 1,000, every year you have 1,000, 1,000, 1,000, 1,000. So it means we are using straight line method. That is your straight line method.
Sir,
Yeah.
in example, we don't care about account for task. I mean, when I bought something, uh, have a task.
Okay. Now let me tell you one thing. Always remember, it's very interesting thing and knowledgeable as well. So let me tell you thing. I'm not writing anything because this question nothing to do with your this topic. So, but I answer your question. So I'm not writing any number, but just I'm telling you. Now you said that when you purchase something, when you buy something like as machine or anything, right? Machine or material, we have to pay tax. Yes, right? We call it VAT. VAT means value added tax. Okay. Now, when you purchase something, what is the purpose to purchase? For example, you are purchasing a motorbike. You are purchasing motorbike for personal purpose, to ride every day, go to work, come back, personal purpose, or you are purchasing motorbike for business purpose. Means you are buying machine for personal purpose or you buying machine for business purpose. Remember one thing, if you are purchasing machine for business purpose, the tax you pay, you can claim that tax back from the government. Means government can return that tax back to you if you prove to government that you are running a business and this is assets you purchased for business purpose. All right. So the idea is that if you are buying a machine here for business purpose, then you don't have to pay tax. Yes, you have to pay tax right now. You need to pay tax right now. But later, at the end of the year, you can claim that tax back from the government. You know, claim means you ask, you have to prove that this asset is for business purpose. You provide some of your business documents and blah blah blah, other documents, and then government will exact same amount return back to you. If you are paying $100 tax on machine, government will give you $100 tax. Now a return, why government will return that tax money to you? Because government know that this asset you are not purchasing for consumption purpose, you are purchasing this asset for business purpose. And when you do business, is good for government, good for society, good for people. So government is encouraging you, because government know that if 5 companies open and they do business, government will have a less responsibilities to give job to the people. Of course, in country, people need job. Who responsible for it? Government is responsible for it, right? But if more and more companies we set up in a country, do you think government burden will be reduced? Yes, government burden reduced. I hope you know the burden. Government burden will be reduced because private company are giving job opportunities to many people. So now government will be relaxed. So government encourage companies to open more and more business. Government, that's why government encourage people to do their business, because if they do business, they are self-made. They not depends upon government that government will give me job. Government cannot produce unlimited job. Government has a capacity. So that's why government is encouraging company to open more and more business. So government says, okay, you don't have to pay tax, because eventually you are helping society. Because the tax we pay to government, what government do with this tax? Government return back to the people in form of jobs, in form of other things. But you are generating job. So okay, you purchasing assets, right? So you don't have to pay tax, because you eventually you are helping government to generate job opportunities. So that's why you don't have to pay tax. Of course, you pay tax, but later you can claim tax back from the government. So that's why you don't have to pay tax if you purchase asset for business purpose. All right. Is it okay?
Yes.
Any question? Can we move on to the second method?
Yes.
Okay, so second method is very simple. Second method is a reducing balance method. Reducing balance method. All right. What is reducing balance method? Under reducing balance method, we calculate depreciation using a depreciation rate. Depreciation rate will be given. We use that rate. Use the rate. So for example, depreciation rate is 10%. So it means every year your asset reduced by 10%. So you purchase asset, let's say $5,000. 10% of 5,000 is 500. Now your asset value reduce, and 10% of this, 450. So this is your depreciation for first year. Depreciation for second year, right? And then you got 41.5, right? So on. Depreciation for 3 years. Depreciation for 3 years, so on. 10%, 10%, 10%, 10%, and this is your depreciation. Depreciation expense, depreciation expense, depreciation expense. This is called reducing balance method. Reducing balance means your balance reduce and calculate depreciation. Balance reduce, you calculate depreciation. Balance reduce, calculate depreciation. Balance reduce, calculate depreciation. That's why we call them reducing balance method. That's all. That's all for your depreciation.
So can I have a question?
Yes.
How about the formulas of this method?
We don't have formula. Depreciation will be given in your question.
Okay. Thank you.
Yes. Okay, so now everybody okay? Now can I give you questions to do that? Now let's do the question. So here is your question. So it says that ABC bought a factory machine at cost of £20,000 on January 2022. ABC expect the machine to have salvage value. Salvage means residual value. Salvage means residual value. The salvage value of 5,000 at the end of its 5 years useful life. Now prepare depreciation schedule for following matters. So you have to calculate depreciation using straight line method and using reducing balance. Declining balance means reducing balance. Reducing balance method. And in reducing balance method, it says that using quarter the straight line method rate. Whatever is your straight line method rate, you use that rate, quarter of that rate will be your reducing balance method rate. So you find by yourself, you know what does it mean. Now B part is following above method, you require to estimate the book value of assets each year accumulated after accumulated depreciation. Now in B, what you have to do, you have to tell me if you have a income statement, how much will be, remember, how much will be depreciation 2022, 2023, 24, 25. And if you have a balance sheet means accumulated depreciation. How much accumulated depreciation this year, how much this year, how much this year, and how much this year. All right, this is your B. All right, so now do that and give me the answer. Everybody understand this question? So now calculate and give me the answer. Please turn it on your cameras, everybody. And if you've done the question, please give me answer in the chat box.
Teacher, can I ask you, like, in the year 2022, the book value start at the start from the year is 20,000 euro or 50,000 euro, teacher?
Which one?
For the 2022.
For reducing balance method?
No, for the straight line method.
Straight line method, you start with 20.
20?
Yes. You start with 20 because the cost of value is 20. I mean, the value of the asset is 20. So that's why it starts from 20. Everybody, please give me your answer in the chat box. So you have to, for straight line method, you have to tell me income statement, how much did you calculate depreciation using straight line method, and for reducing balance for 2002, 2003, 2004, and 5. So 4 years you have to show the depreciation for reducing balance method. And then you have to tell me for asset depreciation, accumulated depreciation for asset. You can simply show like this. So for example, straight line method, right? Income statement. So 2022 income statement, how much? Balance sheet, how much? 2023 Income statement, how much? Balance sheet, how much? 2024. Income statement, how much? Balance sheet, how much? 2025. Income statement, how much? And balance sheet, how much? This is for straight line method, and same reducing balance method. Right. So do that and give me the answer. Zwintren, how come your income statement straight line method is not same? What is 20,000? Is it your depreciation? Because that doesn't make any sense. How can your depreciation? Remember, you have to show depreciation. You don't have to show the value of asset. Income statement doesn't show the value of asset. Income show the expense, right? Income statement, income minus expense. So it's income statement. So why are you giving me 20,000? It doesn't make any sense. It's completely nonsense. So when you write any answer, make sure you read first whether does it make any sense or not just simply whatever I say, you memorize it and you copy and paste it. Do you understand that?
Not really, teacher. I not really understand.
But why your answer is like this? 20,000, 17,000, 14,000. What is that? Can you explain to me? Tell me what is this? 20,000, 17,000, 14,000, 11, and balance sheet 20,000, 37,000, 50. What is that?
Yes. I have some misunderstood. Yeah, I understand. I will do it again. Yeah. Sorry. Yeah, I understand now.
All right. So yes, that's Nam Nguyen. Yes, that makes sense to me. Now, let me explain you one more thing as well. Okay. Now you know that when we make the journal entry for depreciation, the value of assets goes down. So now, remember one thing, in balance sheet, accumulated depreciation. Now, I said accumulated depreciation belongs to balance sheet. Balance sheet means assets, liability, and equity. Now the question is, this accumulated depreciation belongs to what? Is it asset, is it liability, or is it equity? So this accumulated depreciation will be subtracted from asset, from the value of asset. So asset value is 20,000, right? So 2,000 and 2022, 20,000 minus accumulated, whatever is your accumulated depreciation. So you will subtract and you write down number here. 2023 in balance sheet, again, assets, which is 20,000 minus accumulated depreciation. And then you write down amount here. Same thing, 2024 assets is 20,000. It will be 20,000 because your accumulated depreciation change. So accumulated depreciation, and same thing for your 2025, same. So this is the way to report your accumulated depreciation in your balance sheet. This here is your accumulated depreciation, right? So you have to subtract, right? You have to subtract from the value of assets. And income statement, it's your expense, so we subtract from income. But in the question, we don't have income, so income statement is fine. But in your balance sheet, it will be reported like this. So I suggest you, it should be reported like this. I suggest you to report 20,000 minus accumulated depreciation, which is straight line method is 3,000. And remember, yes, so you should report like this. All right. So everybody do that. When you report, you should report in this sense. So always subtract your accumulated depreciation from your asset. Right?
Teacher, can you explain me again why we have to use 20,000 instead of 15,000?
Okay, because okay, so remember, because the asset you purchase is 20,000. You did not purchase asset at 15,000, right? The asset you purchase, you did not purchase at 15,000. The cost of the asset was 20,000. Purchase after minus residual value, scrap value, then its value is 15,000, but the cost value is still 20,000 because you do not know what will be the scrap value. So after minus depreciation, you can get your scrap value. You can say that. Another way to understand the scrap value. So you always purchase your asset as cost price. So you always minus depreciation from cost price. So that's why we subtract accumulated depreciation from your cost price. This is your cost. What does it mean, cost? Cost means purchasing price. That means purchasing price. You go to market, you purchase motorbike, this is your cost price. All right, so purchase price minus scrap value. Scrap value is equals to depreciation. All right, or purchase minus depreciation is scrap value. You can say that. So that's what exactly we are doing. Cost minus depreciation. So after minus everything, the value of asset should be $5,000 at the end of 4 years. For example, right? It's just an example over the period of time. So that's why we will use purchase price, not the scrap value.
So what is the market value of the product?
Market value right now?
Yes.
Market value, okay. Market value of every year or market value at the end of 2025? Every year, this is the market value. This is not a scrap value. This is a market value. Scrap value will be after 4 years because it's after 5 years, 4 or 5 year, whatever. Because life is 5 years. Total life is 5 years. So after 5 years, this is the scrap value. The market value will be finished. The life, useful life, 5 year means, what does it mean, useful life? Useful life means you can use for 5 years. After 5 years, you can't use it anymore. You have to sell it in scrap. So this is your market value. Market value first year, market value second year, market value third year, market value 4 year, market value 5 year. After 5 year, the market value is equals to scrap value. What does it mean, market value? Nobody wants to buy your price, so you will sell in a scrap. So scrap, whatever scrap company will give you money, that's called the market value, and which is very, very small. That's why you send in a scrap. You sell your product in a scrap.
Sir, I don't understand why the reducing balance method is starting by 15,000.
Reducing balance starting by 15,000?
Yes.
No, reducing balance not starting by 15,000. Start with 20,000.
Start. From 15,000.
No, it starts from 20,000 because the value of asset is 20. Who said 15? Did I say 15? No. Right? Always remember, when you are calculating depreciation, we always calculate depreciation on cost price. We always calculate depreciation on the cost price. Remember that. All right. You purchase motorbike $1,000, so of course you calculate depreciation on $1,000, right? Depreciation expense. I'm talking about depreciation expense. So it doesn't matter, is it reducing balance method, or doesn't matter, it's a straight line method. We always used a cost price. All right, cost, the money you paid to purchased. All right, so it's 20,000. Even though you are calculating reducing balance, 20,000, how many percent did you calculate? 5%, right? What is your rate, reducing balance rate?
This is 5%.
5%, yes. So it's a 1,000 first year. Second year is 19,000 multiplied by 5, whatever. And this number minus 19 will be here. This number minus whatever is here. So it's 5% and 20, right? Always use cost price. We never use scrap value or cost price minus scrap value. We use cost minus scrap to calculate depreciation only for straight line method. Only for straight line method. We never do for reducing balance method because we have a rate. So why we need to minus scrap value? We minus scrap value to calculate depreciation if we do not have rate. If we do not know how many percent every year our depreciation reduce. If we know how many percent every year depreciation reduce, then we don't have to go through with the straight line method. All right. So we have two options to calculate depreciation. Actually, we have a total 4 methods. All right. So, but I just focus only on 2, which are most commonly used method.
Teacher,
Yes.
when we do example, you use access, but I use income statement. That is the same and all right.
Okay. Can you tell me again, what is your question?
Yeah. We use the income statement is the same, the accent.
Income statement same like as asset?
No, like when we do table, we use you use accent, and I use income statement. Is that right?
No, this is your balance sheet. This is your balance sheet because I'm talking about asset. This is your income statement.
Yeah.
Right?
Okay, thank you, sir. We use we write
Remember,
three options.
income statement and balance sheet are different. Income statement is sales minus cost is revenue. Balance sheet is asset, liability, equity. So that's balance sheet.
Yeah, thank you. I got it.
Yeah.
Can I ask for the reducing balance method?
Yes.
Uh, so how did the income statement in 2022 is 1,000?
20. Why 1,000? How many percent? Yes, 1,000. Yes, that's right. In 2022, your income statement, not income statement, depreciation expense. Income statement is not 1,000. Depreciation expense is 1,000. Right?
Okay, right.
Student, make sure you don't confuse yourself about it. So one thing you need to remember here. Let me write down here. We are calculating depreciation here. We are not calculating income. We are not calculating anything else. So income statement. What is income statement? Income statement means income, which is sales, whatever is your total income, minus cost, right? That's your profit or loss, right? And in cost, we have too many types of cost. We have manufacturing cost, we have a salary, we have electricity bill, we have wages, blah, blah, blah. And we also have depreciation expense, because expense is your depreciation. So we are calculating this. We are not calculating this. All right. Now, balance sheet. Balance sheet. And in balance sheet, we have total asset, we have total liability, and we have total equity. In total asset, we have non-current asset. So non-current asset, because depreciation belongs to non-current asset. So whatever is non-current asset, or let's say machine. So this is machine minus accumulated depreciation, because depreciation reduces the value of the asset. So you have to show the market value of the asset. This is the market value of the asset. So we are doing this. That's the meaning of depreciation expense and accumulated depreciation. So depreciation expense will be reported in your income statement, let's say 2022 here, and then 2022, if you prepare your asset, that's your accumulated depreciation for 2022. Same thing now, 2023, you calculate your depreciation expense. And same thing here, your total asset and blah, 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 accumulated depreciation for 2023. All right. And then 2024, depreciation expense, accumulated depreciation, and so on. So every year you calculate market value. So that's what you actually doing here. All right. So don't say income statement is 1,000. Income statement is not 1,000. In income statement, depreciation expense is 1,000. Accumulated depreciation is not asset. Accumulated depreciation subtracted from asset to calculate market value. That's why we know this, we calculate this, so we have this. So we calculate accumulated depreciation here because you are purchasing asset. You know this, right? This is the market value. Oh, sorry. This is the cost price. This is the purchase price. minus the cumulative depreciation. This is the market value of the asset. So when you sell your asset in future, you use this price to calculate your profit or loss if you sell, but that's different story. All right. So that's what actually we are doing in this question. So make sure, please don't confuse yourself.
Yeah, so I was asking how did the depreciation expense for reducing balance was
Okay.
start
So,
at 1,000. Yeah.
okay. So do you know, in reducing balance method, you need to calculate the rate, right? You need a depreciation
Yeah.
rate. How many percent? Do you know how to calculate depreciation rate in this question?
Yeah, I'm not sure.
Okay, so do you have any idea what we have to do to calculate depreciation rate?
Not.
Can you
Yeah,
read
I
the
don't
question?
think.
Can you read number A number 2 point under A?
So you got reducing balance method using quarter the straight line method, right?
Okay, so it means the quarter of straight line method rate is a reducing balance method rate, right?
Right.
Okay, now, and how much is your depreciation? How much is your wait, something wrong here. How much is your depreciation rate for straight line method?
3,000.
Depreciation rate. Depreciation rate.
Right. Yeah, I don't think I know how to do that.
When you think,
Is it 20%, teacher?
how did you calculate 20%?
Well,
Why 20%? You have to, yes. Why 20%? $20,000. You mean 20,000 divided by 15,000 is 20%, right? Right? That's what you said. I repeat, you said 20,000 divided by 20,000. Let me write down. If I misunderstood you, you said 20,000, right? Divided by
3,000.
3,000, not 20,000. 3 or 20?
3.
3 or 20?
Pretty sure.
Divided by
Teacher, she said 3,020.
3,000. 3,000 divided by what?
20.
15,000. So it will be 20%. Right? You have two ways to calculate. Number one is this. You do this because depreciation is 3,000 and the market value is 15,000, right? So the total value of the asset is life. You can say life value is 15,000. Or another is, you can see that the useful life of the asset is 5 years. After 5 years, the value of asset will be 0. right? 0 means salvage value, because we already minus residual value. So what does it mean? Every year your asset is reduced by 20%. Can I say that? Can I say every year my asset is reducing by 20%? Can I say that? Yes or no? After 5 years, my asset reduce is simple maths question. My asset reduce every year. And after 5 years, my asset is 0. So every year, how many percent reduce? 20, 20, 20, 20, 20. If I change the question, if I say my asset will be 0 after 10 years, after 10 years. So every year, how many percent my asset reduce?
10%.
10%, simple maths, right? 10, 10, 10, exactly here. So you have two options to calculate your reducing balance rate for straight line method, because the life, what does it mean useful life? Useful life is 5 years. After 5 years, you cannot use this asset anymore. So after 5 years, the market value is approximately 0. Market value means the value we used to buy and sell the asset. Nobody wants to buy, that's why you sell in a scrap, right? So means after 5 years, there is no any market value of your asset. Nobody willing to buy your asset except the scrap, because scrap will break your asset and turn into recycle and sell to someone else. Scrap company, they're not gonna buy your asset, buy your motorbike to ride it. No, they buy to destroy and recycle it. All right. So it means there is no any market value. So after 5 years, the value of asset will be 0. So means every year my asset is reducing by 20, 20, 20, 20. Or another option is my depreciation is 3 and useful value is 15. Useful value 15 means from your year 1 to year 5 in this 4 year, the market value was 15, right? You understand that? Market value was 15. Market value reduced 15. So that's why 3 divided by 15. So means depreciation is 20%. So you have 2 ways to calculate your depreciation rate. So it's up to you which rate you choose. So now you already have depreciation rate, which is 20%. Now reducing balance. What reducing balance method says? The quarter of 20%. Quarter means 25%. So the quarter of 20% is, Huin Zui, can you tell me how much is a quarter of 20%?
So like 25% of 20
Is a quarter of 20 or 25%?
quarter. Is it 5%?
Yes, 5%. So what is your reducing balance method rate?
So it would be 5%.
5%. And first year, 5% of 20,000. Now you have to calculate reducing balance method. So here. So reducing balance method. So 20,000 rate is 5% is minus 1,000. This is your depreciation reducing balance method for 2022. 19,000. Now depreciation for 2023. 19,000, 5% is 950. 950 is your second year depreciation, and so on, right? And same thing for 2003.
Right. Okay, thank you.
Everybody understand this question? So this type of question, most probably you will see in your final exam or final assignment or whatever. Or maybe when you do something else in your next step 5, then you may need this information to calculate depreciation. Then you will check the question, you have to calculate depreciation, because when you prepare income statement, I may ask you to calculate depreciation to prepare your income statement. All right, or I may ask you to calculate depreciation to complete your asset value or balance sheet or whatever. But this topic is finished. Depreciation topic is finished.
Teacher,
Yes.
can I have a question?
Yes.
Why we divide 15,000 instead of 20,000?
Okay. Now, let me explain you again why. For example, today you purchase motorbike, which is let's say $500, right? You bought. This is the cost, like it's cost here, right? You purchase a motorbike, all right? And every year your depreciation is, let's say, $100, right? And it says the not $100. Let me calculate. Okay, so it says the life of your motorbike is 4 years. Life of motorbike is 4 years, and your depreciation is $90. No, not $90. $100. $100 is depreciation. All right. So depreciation is $100. After 4 years, your residual value is $100. This is the question, right? Residual value is $100. What does it mean, residual values? Residual value means market value is 0. Do you understand that? Residual value means, always remember, residual value is a scrap value. Scrap value means market value is 0. Market, what does it mean market value is 0? Market value is 0 means there is no any buyer of your asset. Nobody wants to buy your asset. What I explained you before. You want to sell your motorbike. You're looking for a buyer who can buy your motorbike. But nobody wants to buy because your motorbike is extremely old. So means market value is 0, right? So this $100, who will pay you? Scrap. So you purchase motorbike 500, total depreciation because life is 4. So total depreciation is $400 and scrap value is $100. So now the question is, what was the useful value of the asset in this total 4 years? What is the useful value of the asset? 400 is the useful value of asset, right? 400 is the useful value of the asset. Means this value reduced to make it 0, right? So that's the reason when you calculate depreciation here, you will do 100 divided by 400. Same thing, 3,000 divided by 15,000. 15,000 is the useful value of the asset since you bought until scrap. I repeat, 15,000 is a useful value. Useful value means the value change over the period. And until it's reached scrap value, value stop changing. Scrap value never changes. Scrap value become fixed. Now, the final end of this machine is to just break it. That's it. Scrap value can't go down. Scrap value is the last stage of the asset. Means asset nearly zero market value. All right. So that's why you cannot write down here 20. You can't do that. All right. You cannot write down here 20. If you write down here 20, so it means your scrap value is zero. You understand that? If you write down 3,000 divided by 20, means your scrap value is zero, and 3,000 will be wrong answer as well. So you cannot use here 20. You have to write down here 15, because I repeat, 15 means useful life or useful value of the asset in this 5 years. You can say that. In this 5 years, the useful value of the asset was 15. You purchase 20, scrap 5. I repeat, you pay 20 and you get 5 as a scrap. So it means the useful value is 15,000. So you use $15,000 value. Do you understand that? You use $15,000 value asset, because 5,000 you get it back when you sell into the scrap. You spend 20,000 for motorbike, money out. Scrap value, money in. So how much actually the value of the asset used to produce product? 15,000 used to produce product. So 15,000 means 3,000 divided by 15. So it means the useful value to calculate the useful depreciation of the asset. So that's why divided by 15, not divided by 20.
Okay, got it. Thank you.
Any question, anybody? So it's up to you. How do you calculate your depreciation? All right. So for example, if I change this question a little bit, if I say the salvage value of this asset is $0. If I say salvage value of this asset is $0, so how much will be your depreciation rate for straight line method? How much will be your depreciation rate for straight line method? It will be same 20% or it will be different? Tell me.
It will be the same.
It will be the same. Same, of course. Because again, life is 5 years. After 5 years, the value of asset is 0. So 20, 20, 20, 20. Again, or you can use another way to calculate it. Right? So it's up to you. How do you estimate it? All right. So everybody understand that? Yes or no?
Yes, teacher.
So time is important to calculate rate. Just look at the time and you understand. If time is 4 years, then your rate will be 25, 25, 25, 25, because after 4 years, the value of market value of the asset will be zero. Useful life. Useful life. Useful life means the life of the asset will be useful only 5 years. After 5 years, market value will be zero. That's the meaning of this. So useful life is very important. If its useful life is 4 years, your straight line depreciation rate is 4 years. Useful life is 10 years, straight line depreciation is 10%. All right. So useful life is 2 years, depreciation will be 50%. Depreciation rate will be 50% for straight line method. So that's very, again, this is a simple, if you don't want to do this, again, if you don't want to choose this way, then that's fine. You can choose this way, right? Whatever. Because in straight line method, you do not need a rate. In straight line method, you just simply know how to calculate depreciation. You just need to know formula for straight line method. Sometime reducing balance method question give you rate. So then you don't have to worry about the rate. If the question is giving you rate, then you don't need to worry. But in this question, I just change it so at least you understand what is the rate for straight line method. All right. So if question says reducing balance method rate is 30%, then okay, we use 30%. We're not going to calculate. Remember that. All right. I repeat, if the question says reducing balance method rate is 30%, then you use 30%. Then you're not going to calculate 10% like this question. Everybody understand that?
Yes.
Any questions, anybody? If no question, then we stop here. Now I will see you on Saturday, right? All right. Saturday afternoon, I guess.
Yes.
Yeah, Saturday afternoon.
Yes. So now we stop here. I will see you on Saturday.